I was just talking and had the mute on. How's everybody going? How's happy Monday? Hope everybody's doing well. Happy Monday to you guys. So we're seeing a little bit of volatility. The euro dollar is still trying to build out this bear flag pattern. As I said earlier this morning in the chat room, there's a risk that we see 121.35 this morning. Because that would be the underside of this trend line, but and also the previous support. So I'm actually going to write that down at 121. We're going to give it all the way up to 121.45 now. Let's go over to an hourly chart. You can see we're just kind of flagging. We're at the upper end of the flag. It's probably looks something like this. Probably be doing something like this. Eventually up to 121.45, which I feel will be pretty good resistance this morning. 145. I'm going to keep it in range, but I think intraday you got to think bearish. 120.90 is going to be support. And for some reason, if we get back above this resistance, we should trade up to 122. So I'm going to write that down. Also, let's talk really quick about Bitcoin. So Bitcoin is squeezing back above 40,000. And there's a chance now that I think we see the 42,000 200-day moving average. Okay. Remember the 200-day moving average is, hold on, daily chart. It comes in at 42,500. I'm going to write that down. But we are breaking higher out of it. So 42,500. And this was building that wedge, but the wedge has broken higher. So we got to respect that. But previous support, previous resistance, previous support, current resistance, 200-day moving average. The 38% retracement comes in at 41.2. So just keep that in mind. But intraday support now is going to be 38.5. So just, if we get dips, we might be supported at 38.5. I was just telling the guys and gals in the chat room, you got to be careful because we're above 40,000 right now. Let's see what happens as the market opens. But you might have people, getting trapped, above 40,000. If for some reason we dip back below like 39.5 or so, like this area right here, then you got to watch for a little bit of a trap. Everybody's probably getting long right now, expecting for Bitcoin to move up towards, 42.5, maybe 44, So just keep that in mind. I think that it's recovering and we'll probably get us back up towards 42.5, but just in case we dip back below 40,000, that's a risk for anybody who's long. I'm going to keep it in bearish while we're below the 200-day moving average. You guys know that this is, to me, very important, okay? Because it's not just the 200-day moving average. It's all that previous resistance, support, yada, yada, yada. Today could be one of those things where you get the market, all hopped up on getting long, and then it just, slumps. It's holding up pretty well right now, though, intraday. All right, let's go to, and let me get rid of this for now. Okay. Let's go back to fiat currency. So we got the euro that's, trying to stabilize here. Sterling holding above pretty key support. We mentioned this trend line support on Friday. And guess what? We tested it again overnight. So that's pretty critical. Shows you how critical that 140.70 level is. Pretty important support, in my opinion, on the sterling. Now, I'm going to delete this really quick because if you take, let's get rid of this really fast too. If you take this trend line, right, matched up to like up here, see how these highs are all descending? I'd venture to guess that, you know, any rally back up towards this 618 is going to really struggle. So that's 141.80, just in case we make a stab up there. I wouldn't actually mind putting in a short up in that area. I'm going to actually keep us in range because we're popping out of this channel. You know, we're struggling with this double top. Sorry, a little yawny this morning. It's Monday. Aussie. Big respect to the 70 cent level. I mean, we can just, this looks like it's going to be near-term resistance. So I'm going to write down 77.75 and then 77 cents. And remember, guys, we have the FOMC this week, so don't get like overly excited about the market one direction or the other. You know, it's really choppy. Kiwi, massive support down here that we continue to hold, right? So that support's going to be, I mean, any dip now down to 71.25. Or 71.20. Any rally back to 72 cents should be resistance. Actually, I'll put in 71.95 now. It's a descending trend line, so keep that in mind. Bitcoin's at highs, by the way. I just looked over and it's still moving higher, so just keep that in mind. Dollar Canadian, we are about ready to test the breakout point again. A lot of support down here. Resistance. I'd actually give this a little bit more room to the downside here. Maybe down to 121.25. Resistance being 121.83. That's the 127% extension, or roughly. That's 121.80. So we're going to mark that up. And I'm going to put this in bullish near term. And that's because we popped out of this range. You gotta be able to let it, you know, give it a little bit of room here. Shoot, grab the wrong thing. Gotta let it give it a little bit of room, but this is actually bullish now that we're out of this range. And it's near its lows of the session. This is probably not a bad place to be on the long side. Just my opinion. Okay. Hold on. I'm just so you guys know, I bought a little bit of Bitcoin this morning above 40,000. It's at 45.80. I'm learning this Coinbase Pro platform, and I'm not sure how to exit. It's a pretty small position, so I'm just trying to figure out how the hell to get out of it. Hold on really quick. Man, they crush you on spreads. Holy cow. My goodness.
How wide?
Huh?
How wide are they?
I mean, I'm using Coinbase Pro, and I mean, I'm trying to figure it all out. But
Yeah, I heard that the spreads and the fees in general are ridiculous.
it's crazy, man. It's like I don't know how much trading I'm actually going to do on this platform. To be honest, like tried a couple other platforms, and this Coinbase Pro is kind of new just to do margin, but it's like I don't know, man. It's hard to say how big the spread is, but I think it's, you know, what you're, because I'm trying to figure out where it's all quoting. It's yeah, I don't know how comfortable I am with it. Anyway, so Alexander says, "Hey Blake, have a great week. You too." All right, sorry, I'm going to get back to analysis. I just wanted to. It's like, yeah, I mean, I just scalped in and out of Bitcoin, and I barely made anything, and I really made, like, you know, from 40,100 to 40,500, and I'm, you know, move wise, I made a decent amount, but when you look at my P&L, it's like, what kind of crap is that? Anyway, so back to it. Sorry, guys. They really, really crush you with spreads. All right, so this is all same. 89.30 resistance is going to be 90.70. Remember, that's the 200-day moving average. All right. US dollar, Norwegian krona, same as before. 824, 842. There's really nothing to do here. Still in a range. The Swissy, it's bearish while we're below the 200-day moving average. By the way, this is same as it always has been. Dollar Mex. So this is, I know I talked about this on Friday, and this is something we got to keep an eye on with the dollar Mexican peso. I think this is a Wyckoff, you know, right here. Actually, you know what? I bet we can do this. Let's add. Let's go over to the day. Shoot. Hate it when I do that. Okay. There's that little move to lows. That volume on that day was really low as well. Okay. So this move down here was that low volume sell-off right here. So we've already rallied. We're retesting. So as long as we can hold above, let's say roughly 1970, 78, we've been writing down that number quite a bit. The risk is that we move back towards 2020. So it's range bound. I don't want it to be bearish as we had a false breakdown there. Okay. Okay. Dollar yen. While we're above 1920, the risk is a move back up towards 110.30. This is going to be key. 110.30. That's the range. Dollar index channel support is now at 90. Resistance 90, 60, 62, and beyond that is going to be 90, 85. This is going to be key support because that is channel low. Okay. So support, resistance. That's what the dollar index looks like to me. S&P nudged up against the highs. Intraday support's 4,200. Resistance is 4,260 and 4,300. So intraday support's 4,200. Whoops. And this is bullish. Gold. I know there's been a lot of chatter about gold, but it did find support where it was supposed to find support. Right? $18.45. The low today is $18.44.63. So I guess 18.45 that we've been putting that asterisk on. Whoops. Was important, right? And guess what? It's still bullish while we're above there. Resistance is 18.75 now. So any move back up towards here might find some sellers. This is still bullish. I know it doesn't feel that way at the moment, but 18, what did I put? 75? Yeah. Silver. Notice how silver is still making higher lows, right? So that low, we're going to mark up 20. Well, I mean, I'll mark up 27.30 and then 27. So just because gold's holding up, I don't think we're going to head back down to 27. Resistance is going to be any move back up towards here. So that would be 18.25 roughly, or 28.25. There we go. All right, so there's your range. And I do believe silver's in a range. Gold is bullish, but you had to be buying gold like this morning at 18.45. It's already 18.52. I mean, you can buy it and put your stops below the lows, but, you know, you should have already been aware of that number. All right, guys, so there's your bias chart. Steve, Stelios, good morning.
Good afternoon.
Oh, good
Hello,
afternoon.
hello.
Yeah. How's it going, guys?
Okay.
Hey, I'm gonna let you guys take over. I'm gonna go fiddle with this Coinbase Pro. I'm not too keen on
Go
it.
fiddle with your coins.
Yeah, I'm not, like I said, I'm not.
So from what I understand, Blake, from working for Gelos Capital, you're now going to be working for Coinbase, right?
Yeah, he's probably busy now. Don't worry.
No, I didn't get it.
I mean that you're going to be working to make commissions.
Oh yeah. Well, no, I wasn't working for Gelos. I was working for JP Morgan.
Oh yeah, true.
All right, guys. Yeah, I mean the spread is, I don't like it.
I bet it is. But to be fair, right, when you have something that's so horribly volatile, I mean, imagine the counterparty risk, right?
Well, yeah, I mean, but it's the spread and then the fees they tack on top of it. It's like, ugh.
You know, it's hot, right? Now that it's hot, and
All right,
everybody
guys.
wants to do it.
Yeah, all right. All right. I'll let you guys take over. Have a great one, everybody. I'll see you in the chat rooms.
Okay, mate.
Thank you,
Bye.
Blake. Okay. Yeah, very little to say actually from what we talked about in FA.C.E. Cryptos are rallying. Bitcoin is broken out of what I thought was a triangle, and I thought we would get a continuation lower. But Elon Musk tweeted, when was it? Yesterday or whatever. And
Yeah, live by the sword, die by the
yeah, by
sword.
the
I
sword, yeah.
mean, yeah, this crowd is, hanging on Elon's tweets, and this can work both ways, right, Stilio?
Yeah, no, absolutely. Hold on a second. Go, please. Go. Sorry. I have two kids here who want something from me.
And then they will always want something from you.
Okay. Yeah, so cryptos are going up. Metals are not having a great day, but are bouncing. I posted on the chat room a gold chart where, if you look at the daily chart, we were just retesting the broken. It was like something like a channel, and we broke out some sessions ago, and now we're just retesting. And I wrote it was 1844.90, so 1845. I said, look, if you're looking to see support, this is the place. And
yeah, 1840 is the 200 daily moving average.
Yeah.
I was monitoring this either as a triangle or as a flag. The triangle possibility is now dead since we slashed through it. But the channel, the confluence of this channel, trend line support, and the 200 daily moving average so far held very nicely at the lows of the day. So this needs to be noted. Add to that the fact that we're still trading above the long-term broken channel trend line resistance. So, for me, I know that it's been 2 negative days, Friday and so far today. But it really doesn't tell me anything. I mean, I couldn't care less. For me, it's still within the context of noise. Even more so in the case of silver. I mean, silver was barely negative on the day on Friday. Yeah, it was lower than the highs of the day, but having to do with its opening price, it was like negligibly lower. And despite being somewhat lower earlier today, it has now already pared back its losses to just like 0.5%. So
yes,
I really don't think that somebody should try to
especially not ahead of the Fed on Wednesday. And
oh yeah, absolutely.
it's going to be a busy week in terms of central banks. We have the Fed, the Bank of Japan, we have Norges Bank, and we also
Absolutely.
have SNB. I mean, nobody's going to be hiking or changing anything, but with
but the market knows that, so the market cares about what they're going to be saying. They know they won't be hiking. Yeah,
exactly. Forward guidance or any hints. And with inflation going the way it has been, at some point there's going to be some kind of a reaction from central banks. And we already saw the Bank of Canada tapering, and even the slow and heavy central banks are going to be have to eventually do something. And
yes, absolutely.
Norges Bank we have on Thursday, I think, is it? And they're known to be pretty fast in changing the course, and they adapt quite quickly. So this
because oppositely from many, they actually have a real economy which
with the surplus and savings.
which they can afford letting it function with somewhat of a normality.
Yeah. Yes. Otherwise, what else? Data we had very little today. Nothing worth mentioning. Otherwise, markets. I mean, FX is not really doing anything. So we have to wait for the Fed, unfortunately.
Yeah, equities. For those that are looking for like potential reversals, because I know that many of you are like reversal junkies. Yeah, that's true. I mean, somebody can still see this S&P chart and say that there is the potential that we can still be within some type of a more complex correction, because there are corrective types, like for example, if you take Elliott waves or harmonics, there are types of corrections that you can actually surpass the previous high and still be in a corrective move, right? A flat and an irregular flat, for example, in the case of Elliott waves. So there is some basis, technically speaking, to assume that. I mean, RSI is still heavily divergent. The move higher has been a very slow grind after we got this 3-day sell-off that we had over there. So who knows? Let's see if we can like stall or even pull back a little bit prior to all this event risk, and perhaps this event risk, if it can actually produce some kind of a reversal like that. Of course, as always, I'm the first one that says, be very cautious. Don't try to fade the trend. And if you are trying to fade the trend, make sure you know exactly what you're doing. You have exactly, a trading plan. You know exactly what you're risking. And what you're looking to gain, and make sure that risk reward ratio is actually worth it based on the chances of going counter trend. Because when you're going counter trend, you know in advance that your chances are below 50%, right? Depends on how strong the trend is. I mean, might be even like a very low possibility. So you need to compensate that by having a very attractive risk reward ratio. So if you're trying to trade counter trend with a 1-to-1 risk reward ratio, guess what? You can make money on that trade, but if that's your market approach, you're going to end up losing a lot of money. So you're trading counter trend. In my opinion, make sure that you have at least like a 3-to-1 risk reward ratio, right? Otherwise, statistically speaking, over a big number of trades, you're going to find yourself, being deeply negative in your P&L from these type of trades. In any case, there
Yes.
is the potential for something like that. We can see it in the S&P. We can see it in the Nasdaq. It's not exactly the same formation, but a rather similar one. The IWM is also in a long-term RSI divergence. Admittedly, it has broken out from this nice triangle, but it hasn't even produced a higher high. So although it made the move first to the upside, having to do with breaking the period of consolidation, it's the one that hasn't produced a higher high among the three popular. And if we want to add the fourth one, which is Dow Jones, then you have to point to the Dow Jones as well, because the Dow Jones also hasn't produced a higher high. The S&P and the Nasdaq have incrementally, but they have. The Dow and the Russell haven't. Also, the Dow, can be interpreted that it's in a nice ascending wedge. RSI divergence is also, quite obvious here also. So keep that in mind ahead of the event risk, because the reason I'm stressing that out is that we know that when we have a lot of event risk, it can be the catalyst for like either a, a continuation with gaining momentum in the direction of the previous trend, or sometimes in a reversal, right? Now, having said all that, we've also seen, an attempt of a rebound on behalf of the DXY. Now, I have to start by pointing to the DXY chart, which clearly shows us that yes, we have moved somewhat of the lows, but unless we break through this channel, the corrective move so far is, extremely weak, extremely weak. and looks to me like another bear flag. So in order for me to be convinced that something bigger is brewing in the senses of some kind of a bigger corrective move is about to happen, at the very least I need to see a break above this 90-70 area. And if you want to be even more to the to the safe side, I would say 91.50, probably these highs over there. So we can then speak about the possibility of a bigger dollar correction. Obviously, if, which as I said is a low probability, if we get that type of a reversal in equities, let's assume that the Fed comes out more hawkish than people expect. Now, in my opinion, that I believe this is a low probability, right? But in any case, I can't front run the market, the Fed, and assume I know what they're going to be doing. I think I do know, but we've all been wrong on on many occasions. So the market gets a little bit spooked. We get somewhat of a risk off. That should help the DXY recover, right? We know that. Actually, it should help the DXY recover for two reasons. Because if we assume that the Fed sends a more hawkish message than people expect, that would mean that the market is going to have to price in some rate hikes, which is currency positive on its own. And also the equity markets are not going to like that. And risk off is also currency positive if we're talking about the DXY specifically, right? Because people that will be liquidating a lot of those positions, where are they running to? What are they liquidating to? To the dollar, right? So yeah, I do believe that we need some kind of a hawkish message that will produce this kind of a dollar move along with some kind of a risk of move. Personally, I think the chances are higher that the Fed is going to surprise the dovish side once again. They will probably acknowledge, throw a little bit of a bone to the markets having to do with, because they always want to appear like they do care about inflation, and they never forget their role having to do with monitoring and regulating inflation. So they're going to be like, we're monitoring, we think it's transitory, we're monitoring, and we're not going to be hesitating to act if it's needed, so on and so forth. But I believe they're going to do nothing, and they're not going to even give some kind of a time horizon that's going to make the markets believe that they're about to do something, sooner rather than later. So I do believe that the chances are in favor of equities resuming to the upside, dollar resuming to the downside, with whatever that means. If you look at the euro itself, that also looks bullish, right? Which is like a mirror image of the DXY, more or less. For the time being, this looks to me like a bull flag. If you look at the cable has spent, what is it now, like around 3 weeks consolidating in a very, very tight range, but within this ascending channel. So in my opinion, it's just alleviating the overbought conditions, and will probably continue higher, being more free to do so. Some people are also going to be like bored in holding pound longs, and they might abandon ship before they can actually make a profit, because they bought late. They've now started getting worried by seeing that they've bought and they haven't made any money in like in 3 weeks. Many of them might abandon ship before cable can actually move to the upside. Now Aussie, Kiwi, CAD, NOK, and all the rest, they haven't really done anything substantial. I mean, until proven otherwise, in my opinion, through different types of formations, each one looks like it's just consolidating its recent gains against the dollar, or even correcting somewhat against the dollar before it can resume appreciating against it. So, the worst looking one, the pair in which the dollar looks somewhat better, I would say, is USD CAD. But I still think we might be in a rectangle here, right? We're testing these previous highs over there. So far, we're getting rejected. So I wouldn't be jumping the gun almost anywhere in this. I wouldn't want to fade strength of commodity currencies, not until I have a lot more concrete evidence that something like that might be happening. Now, Canadian, somewhat weaker than the rest, but still, in my opinion, there's no technical development here that says, oh, you should be selling the Canadian against the dollar. I don't think so. We're not there yet. And I don't know if we're going to be there anytime soon, to be frank with you. And if I'm wrong, I'm going to be the first one to admit. And I'd rather, I'd rather join a little bit later and have more conviction than the opposite. Could Dow theory be setting up upon Dow transport? Over 3% decline, over 3% rally, and now possible breakdown. Jane, now having to do with Dow theory. Used for fundamental reasons, it used to be a lot more reliable than it is nowadays. When economies were less globalized, in essence, that's the big difference that has changed this. But let me have a look at the Dow transports now that you mention it. Where are they? Is it this, the DTX, right? I'm assuming. Is this the one, Jane? Quite a beautiful channel, if you ask me. Look at this, perfect. But I have to tell you that so far, I'm not seeing anything bearish other than very, very short term, right? That's what I think. BTC, yeah, Bitcoin. So, as I said before, let me pull it up. So, Bitcoin has had a very massive update yesterday, based probably exclusively to Elon Musk's tweet about. He actually said a couple of things. He tweeted about a couple of things. One of them had to do that with the fact that Tesla has like only sold like 10% of its holdings because quote unquote, as he said, they wanted to test out like the waters to see how liquid it is, and if they could do that without moving the market too much. That's more or less almost verbatim what he said. So that obviously gave some hope to the bulls, like, oh, Elon hasn't given up hope on Bitcoin and he hasn't abandoned ship. And he also said that Tesla will probably end up using it, or will use it again, or something like that. Anyhow, now, has this drastically changed the technical picture here? In my opinion, it hasn't. It hasn't yet, let me add. And the main reason is the following. As I've said many, many times, corrective moves can take several forms, and you can only speculate at the beginning of what you think you have in hand. So we were speculating that we might have a triangle in hand, but who knows? We might have some kind of a channel here in hand, right? So I wouldn't say that Bitcoin is out of the woods yet. We have a very nice confluence of resistances, roughly at 42,500. The 200 daily moving average, this horizontal support resistance area that you see over there, we can even extend a little bit higher. Channel passes towards like 43,000. So I would have to say that that's going to be the big test. So my main thesis remains that there is a very, very high probability that Bitcoin still has one leg to go down. Now, Ethereum, as you see, is, after a decent period of time that it was actually overperforming Bitcoin, it started somewhat underperforming, and yesterday is a big testament to that, right? Which is also another proof that it had to do with Elon's tweeting, because Ethereum didn't end up benefiting almost at all from that. It was exclusively Bitcoin benefiting from that, which in essence created like a big short-term gap between Bitcoin's performance and Ethereum's performance. Ethereum, as you see, still remains trapped in the middle of this recent consolidation, which so far looks like a triangle. We're far away from the trend line resistance. We're actually in the middle of this triangle. So just by looking at Ethereum, somebody would guess that nothing really happened over the weekend having to do with cryptos, because they usually are very much correlated with each other. So if you could only look at Ethereum, you would assume that Bitcoin also was more or less treading water during the weekend, as well as the rest of the complex. As you see, Dogecoin, for example, is barely above 1% higher on the day, which for cryptocurrencies being up or down on a day 1 or 2% is literally zero. It's like they haven't moved at all. So yeah, let's see if we're going to see follow through in the case of Bitcoin, or if the market with this move already in essence priced in uh, uh, this statement, let's say, from Elon, and it's now in need of a bigger catalyst if it is to run higher once again. Thank you, mate. If I did Palladium, no, I didn't yet. So gold, by the way, look at gold. Gold has pared back like 2/3 of its losses already, right? You can see the bottom.
Silver is positive on the day now.
Yeah, and silver is positive on the day. That's what I want to say. So look at these moves, which are being retraced. What does this tell you? There is genuine bidding interest in these metals, and for a very good damn reason, right? Also, look at platinum. The reason I wanted to pinpoint to platinum is I was talking to the possibility of another leg lower, which more or less we did see, right, towards 1040. But I have to tell you that the more we are getting price action after breaking through this triangle, the more it looked like that this move lower doesn't have much, legs to run, to stand on, right? So just look at this move. I mean, how nice it forms this descending wedge in essence. So I would have to say that the more I look at this, the more I'm wondering if we're actually even going to make it to 1040. So in my opinion, there is a good risk that platinum is just going to run higher from here without even going lower than what we saw on, what was it, Thursday, that we had that spike lower. So keep that in mind. Now, having to do with palladium and copper, nothing has changed in my opinion. Both still within corrective channels. I think that probably this corrective move has run big part of its course, and probably we are very close to turning higher. Now, another thing that needs to be said is, you see how strong crude oil is, right? You remember I said many times that I doubted that we had seen that the 127% extension was enough to fulfill the market's appetite for upside targets. I said that 72.5 was a nice confluence of resistances as a first target, and we're not so far away from that anymore, right? And above that we have like 74.60. So I remain very bullish crude in the short term. Although I remind you that you have to be somewhat careful because, in my opinion, technically speaking, the market, especially after this breakout from this triangle and this latest move that we're seeing higher, I think it has run, it has already made the easy move higher, if I could say so, right? So the easy money to the upside have already been made. So I don't think that you should be chasing. I'm actually very sure that you should avoid chasing this market to the upside, right? I think it has more upside, but from a risk reward perspective, doesn't look good anymore. It doesn't look good at all. I would only be interested anymore only if we see like a sharp leg lower, right? Or anyhow, a decent corrective move lower back towards like 57. Might even see a deeper correction eventually, like towards 50. Might. Now we're going to find out. Depends on where we end up starting the corrective move from, right? In any case, still remains very, very well bid. Any more questions, guys? Giles? Aussie Kiwi? Absolutely. So Aussie Kiwi has already, let me show you. So Aussie Kiwi had broken through this channel that you see there, and actually had like a nice momentum to the downside, and then slowly but surely reversed higher, and we're now back within this channel. So this, in my opinion, clouds the situation, the technical situation, quite a lot. Now, the long-term technical viewpoint hasn't changed here, right? We remain within a longer-term descending channel that hasn't changed. So within the context of that, we can be doing a lot of things, and technically speaking, the long-term picture that doesn't change. The shorter-term picture, though, has changed now that we broke back into this channel. And I have to tell you that, yes, this is probably a bullish development, right? But just by looking at this chart at the moment, I would stay away from it. I want to see more price action before I would even decide to participate in this market, because I'm not sure what's happening here in the shorter term. I know that we're currently testing resistance. You can see we had like several highs in this area around 108. So in the short term, I would have to say that this is resistance. 108 is resistance. So in the short term, if you want to fade this move, at least for a short-term pullback, I think it's not a bad idea. But personally, I would just stay away from it until it starts looking more clear once again. Now, we have a question about natural gas. Natural gas broke out last week. I showed that to you. Let me find it. Here it is. So natural gas broke out last week, and we closed above this triangle trend line resistance on a daily and weekly basis, right? So it's impossible for me to just ignore this development, right? I think it's a technical development worth noting. And until proven otherwise, I think you should respect that. And there is a very good chance we're going to see an extension towards 373, 374, the 161.8% extension of this triangle's range. Let me see. I don't need this anymore. Let me see which line. No, let me make this again. I'm not sure it was drawn properly. So let's take the high and the low. There we go. So 370, the 127% extension of this, the triangle's range, in essence, right? I think that's the next upside target for natural gas. UAVS, okay. UAVS. Is this the one? Yeah. I really wonder what happened to this one previously. We had this explosion of enthusiasm, clearly. I mean, this move looks completely sentiment related. The question is, have we deflated this bubble enough so it can move again to the upside? Yeah, we have. I mean, the market retraced. Let's see. The market retraced like roughly 85% of the move higher. It might be moving higher once again. It might have found a low, actually. There is a chance that it has found a low. I think you can try buying 530 and 495. For another leg higher, at least one more leg higher. That's what I think. These are levels to buy. Amazon. Look at this. Now, this is a beautiful example of how tough it is to call corrective moves in advance. Just look at Amazon. It's clearly a very, very overbought market that no one dares to sell. So, in both of these occasions, look what did Amazon do? Triangle here. And rectangle here. There you go. So, of course, this favors a breakout to the upside with an upside target of 4.2 thousand. But of course, you know, you should remain patient until that happens. There we go. That's what I think about Amazon. Very nice formation, actually. Very nice technical formation. Tesla. Now, last time we looked at it, I said this should break lower. It did. Now, if we look at it short term, I think it's saying to us that it's not done. This might be a triangle or a little flag or whatever, right? So I think the bigger probability is one more leg lower and let's see. We might be trading within some like bigger channel. Might be the case. Too early to say. But yeah, something like this. Alternatively, we break above that high, look directly higher. And last but not least, PLTR. Yeah, nice breakout. I think we mentioned that. And this looks like a nice short-term consolidation up here. Okay, nice. Oh, Euro-Swiss. Yeah, we had that question. I didn't see it. So Euro-Swiss ahead of the S&P as well. Look at this reaction. Look at this reaction. It came from the 200 daily moving average just after slightly overthrowing this channel. So I find this reaction in this area very interesting, right? I think that the S&P might be, once again, silently supporting the euro against the Swiss franc here. So, I would say that it doesn't look like a bad long. Not as long as we hold this 200 EMA. Okay, guys, gals, thank you very
Steve.
much.
Thank you, everybody.
And I'll see you again tomorrow.
Cheers.